As Xi Jinping's China puts pressure on Alibaba Group, Didi Global, private educators and heaven knows who else, one wonders if it's preoccupied with the wrong battle. No doubt, President Xi's government is springing to action to contain the Delta variant-driven COVID-19 boom now reportedly shaking up Asia's biggest economy. Emphasis on reportedly because, once again, Beijing isn't saying much about the surge in cases about which observers are warning. It's dawning on the world that China's outbreak is the most serious since the initial outbreak in early 2020. Reports of fresh lockdowns have global investment circles in a whirl. Everyone knows this is about to derail the V-shaped recovery markets took for granted. Thanks to the opacity of the Xi era, since late 2012, who can say how much? Here, Beijing's tech crackdown is exacerbating worries on two levels. 1. The self-inflicted economic damage is tripping up China's stock market and the negative wealth effects that might follow. 2. The chaos, indiscriminateness and uncertainty of it all suggests Beijing cares more about controlling domestic information than being a good global stakeholder. Again. Yet this could be the week where these narratives collide. The drip, drip, drip of bad COVID news is getting matched by a steady flow of disappointing economic data. Factory output slowed sharply in July, increasing only 6.4% year-on-year. Retail sales, meantime, rose just 8.5% from a year ago, losing ground from the 12.1% pace of growth in June. Not dreadful data, but hardly the stuff of V-shaped lore. Yet the most important indicator will be how openly Xi's government responds this next COVID wave. Although China botched the first round of COVID-19, we tend to focus on Beijing's assertive COVID-0 strategy of harsh lockdowns, widespread testing and contact tracing. All fine, until a far more transmissible variant like Delta, or what comes next, shows up. All seems fine, too, when the vaccines China is using, and hawking to Indonesia, the Philippines and elsewhere, prove less effective than advertised. The rapid spread of the Delta variant across China over the past month is posing the biggest challenge yet to the government's zero-tolerance policy toward COVID-19, economist Ernan Cui at Gavekal Research. In her recent Delta Stress Test report, Cui reckons that China learned a lot from early 2020. As the new COVID wave unfolds, she says, Beijing's current containment measures are more refined and localized than they were in 2020. That, she says, means the loss of economic activity this time around should be more localized and therefore smaller. Let's hope so. This time, though, the globe will be watching closely to see if China's government really did learn from those mistakes. And, importantly, how Beijing does this time may bleed into investors' perceptions of whether China is a buy or sell heading toward 2022.